Housing market crash of 2021. Will it happen this year? Will it happen in 2023? I may or may not have the answers. There's super asset bubbles across every asset class. Honestly, we live in a super warped world. I'm gonna explain what I mean by that, so make sure you stick around for all that and more. It's Crystal with the Cash Compass. All right, welcome back. I am here to teach you all the things that you should have learned in school about money, but for whatever reason, they forgot to mention it. If you love all things personal finance, investing, economics, you're definitely going to want to subscribe. This is a place for you. Make sure you hit the bell while you're down there as well. Let's get into it. So shout out to M-Laz. I hope I'm saying that right. M-Laz. Because sis was like, look, you said it was a market crash, but I didn't get the receipts. So I am here to clarify that video. If you want to know what video I am talking about, click this up here. It will lead you in the right direction. I'm basically talking about the market crash that I think would potentially happen in 2023. But I want to expand on that and kind of provide more details. So let's do it. As you can see, housing has been going up through the roof. Stocks have been going up through the roof. As of late, not so much crypto, but cryptocurrency has also been going through the roof, in the past year or so, okay? So is right now the right time to invest? Is 2021 the year where you are going to become an overnight success, billionaire, trillionaire, because these things are giving you like thousands of % return, right? Not so fast, partner. This one thing can really F up everything. And we need to make sure that we're paying attention to this, because then when that happens, we'll be able to know what moves to make. As I mentioned earlier, everything, and I mean it, everything is manipulated. Everything is warped. What you're looking at is like a fake world. Back in 2008, okay, that's when the market and the world as we knew it literally ended as far as finances go, okay? That was the introduction to bailouts and free money and endless money printing. And ever since 2008, we have not lived in a real world, okay? Asset values have been determined by a certain few number of people, okay? Between stock buybacks, between the Federal Reserve just kind of monetizing our debt. And I mean, that could be really detailed. I don't want to get too detailed in this video, but basically we have certain policies in place that make it impossible for things to actually really crashing it to its real fair value. We have people who are manipulating it. JP Morgan has been fined countless numbers of times for rigging the precious metal markets, okay? It's a fake world. So we're just doing what we can with the information that we do have, but the key player in this kind of fake world is the Federal Reserve. They are in control of our cash, and the banks too, because the banks create money as well. If you want to know what I'm talking about, I have a playlist up here talking about economics that will definitely put you in the right direction. But the most important thing to understand is that once 2008 happened, we kind of left the free market and letting people actually determine real fair values. It's been heavily manipulated, okay? So starting with the housing, okay? Housing has gone through the roof. Get it? The roof. Why has housing prices climbed, and are housing prices going to continue to climb in 2021 and beyond, or will it crash? Like I've mentioned, probably to the point of nauseum at this point, rent and mortgage moratoriums. If someone told you, listen, you don't got to pay rent as long as you live right here, why the F would you move? Why would I go anywhere if I don't got to pay rent? Why would I go anywhere if I don't have to pay my mortgage? I'm going to sit tight, okay? So because of those two things alone, that dramatically reduces supply, right? Because you might have a situation where somebody was renting their house out, but the person moved out and they can't really find anybody else to rent it, so they're going to sell it. Now what you have is renters are not leaving because they don't have to pay. And the homeowners are not leaving either, because as long as they have a government loan, they don't have to pay either. So that has dramatically reduced the supply of inventory. There might be some pockets, because, obviously real estate is very location specific. So there may be some areas where COVID did not really have much of an impact. Believe it or not, there are places in this world where people never had to wear a mask, because they did not have as heavy as an impact on COVID. And not even around the world, like in America, okay? If you're in a town like that, let me know, because I'm gonna come visit you. But because people don't have to pay anything and they're staying put, that limits supply. If there's a limit of supply, the price will go up. That is a simple supply and demand thing, okay? So the policies that are being implemented are causing prices to rise. What else? The Federal Reserve is buying mortgage-backed securities. I've talked about this before. I do not want to go into detail right now. If you want more information on what that is, click up here, okay? But long story short, the Federal Reserve is basically buying up all these houses in the form of a security. A security is when they gather a whole bunch of different loans up. I still end up explaining this anyway. And whatever. They grab a whole bunch of different loans. You might have seen this happen in your life where they're like, hey, guess what? We sold your loan. And you're probably like, whatever, just tell me where I need to pay. But they sold your loan, they bundle all those loans up, and then they sell that as an investment, okay? That's basically called a derivative. If you've ever heard a derivative, it's where the value of something derives its value from something else. So these securities derive their value from the homes and you actually paying your home, your loan, okay? Anyway, the Federal Reserve is buying that by the billions per month, okay? Tens of billions of dollars per month is getting purchased. So what does that do for a bank or for a company? Let's say you have a situation where someone says, listen, I kind of like you. I don't want to see you fail. Every single month, I am going to spend $100,000 in your business. That's going to motivate you to get more stuff made, right? So you can sell that. So you can have your regular customers, but then you have your prime customer who's buying up all your stuff. So you're going to make sure that you're keeping your business flowing so that they can come in and buy $100,000 worth of goods, right? So if these banks want to make a profit and they want to have these securities that they sell out, they are incentivized to actually give out more loans, right? So they might loosen up the lending standards because they know if they get you a loan, they'll originate the loan, they collect their fees, and then they get rid of it. It's no longer their problem. They don't really care whether you pay or not because it's not their problem anymore. They sold the loan to somebody else. And there's a great incentive to keep on doing that because the Federal Reserve has literally told you, I am going to buy $40 billion per month, okay? That definitely is going to also inflate prices because now it's kind of a false demand for these securities. Another thing is FOMO, okay? Prices are just going up through the roof and you might be like, wow, I need to go buy a house right now because I think next year it's going to be even worse. So because a lot of people are thinking like that, they're all rushing to the housing market also, only to find that there is not a lot of supply of homes because of the moratoriums, because of the kind of false demand. And that's also bringing the price up because people are rushing in to just grab up whatever they can. And you see that across every asset, okay? Let's think about the toilet papers. Let's think about gas the other day. The minute someone hears that it's like scarce or it's like gonna run out, people just rush and they get it, okay? It's the same situation here with the housing market. People are rushing to get in because they're fearful of the price going even higher next year, or they're speculative and they're like, look, I'm about to cash out. I'm gonna buy this house. It's going to go up 10% next year, and then I'll pull that equity out and go buy me a Rolex, you know? I don't know. People are just crazy out here. That coupled with the fact that there are foreign investors who also come in and pay cash, straight cash. You might wonder where the hell they got this money from. It could also be institutional buyers. There are companies who are literally in the business of buying up houses, single family homes, maybe even multi-family homes, and they rent them out. It's their business model. So you're competing with people who have a large amount of capital, who have the resources to buy these things out in cash, and that prices people out of the market. So what would cause that to crash? The main thing, obviously, is the Federal Reserve saying they're not going to be purchasing any more of these mortgage-backed securities. Going back to my example, if the person who was going to give you $100,000 every single month to buy products was like, hey, guess what? Like, I'm kind of in a tight bind. I will no longer be able to buy $100,000 worth of your product every single month. What are you going to do? You're going to stop producing as much, right? So you might have hired a whole team of people to help you keep on producing whatever product you had so you can have enough supply to provide this person with what they are looking for. Now that you don't have that, well, guess what? You don't need a team anymore, so they're fired. And you don't need the product anymore to that extent, okay? Same thing will happen in the housing market. Banks will probably be a little bit more strict on who they're lending to because they might not be able to sell those loans as quickly as they had been before. Before they had a guaranteed buyer of those securities. Now they may be stuck with these loans for a little bit longer period of time. So because they're going to be stuck with these loans a little bit longer, they're going to be a little bit more they'll scrutinize a little bit more, right? They'll make sure that this is going to be an actual solid investment because they don't want to lose money. As it stands right now, they won't lose money because they're going to originate the loan. They're going to give you the loan, bundle it, sell it to somebody else, and it's no longer their problem. When that changes, when the Federal Reserve says they're not going to no longer help people, that's going to all reverse, and they're going to be a little bit tighter. That can cause a crash. 40 billion is a lot of loans to buy every single month, okay? So when you lose that buyer, you will definitely see a true shit show. Yep. Also, the Federal Reserve is buying $80 billion worth of treasuries. And if you did not know, treasuries for the most part dictate other interest rates. It could definitely veer away from that. But if the U.S. Treasury amount is going up, typically mortgage rates will follow that. Maybe car loans, those rates will follow it too. It doesn't necessarily have to, but it can. If the Federal Reserve says they are no longer going to be buying up treasuries, and this gets a little bit technical also, but just what you need to understand the basics is that, again, no longer have a demand for that, those interest rates will rise. That will cause a rise across other different sectors, including the housing market. When when interest rates go up, the housing prices go down because it becomes less affordable when the interest rate is too high. Now, the Federal Reserve said that they plan on keeping interest rates suppressed for the next few years, and they keep it suppressed by buying up these treasuries, okay? That's what we refer to as monetizing the debt. So you're basically printing out money to basically finance certain things the government is doing, right? If me and you need more money, we either need to cut our expenses or earn more money, right? Get a higher paying job or something like that. When the government, at least what's going on right now, basically, when they need to finance their expenses, they're not trying to cut their spending, right? They're not trying to fire people. They're not trying to make more money, like maybe charge higher interest. No, they're just creating money. And that's called monetizing the debt, okay? If we have a situation where the Federal Reserve is no longer monetizing, just creating money out of nowhere as opposed to really creating a balanced budget, that could definitely cause a major crash across a lot of different assets. It will not just be housing, okay? Keeping interest rates low is really the core of our success right now. And I'm saying success like this because I don't think it's that successful. But when we have interest rates so low, it makes things more affordable. If interest rates go higher, you will definitely see an impact in the prices of homes. Another thing is the evictions. So we've seen eviction, kind of a federal eviction ban being lifted. However, we still have a long way to go because even though they did have a federal eviction, some states held the belief that, listen, these evictions do not go through federal courts. So you will not control what we do in our evictions, okay? There's certain states where they said, bump that, you're getting evicted because we said so, this is our shit, this is my state, right? And other states were even more strict than the federal ban, right? And they were like, listen, we're taking it a step further. You can never evict anybody ever again, right? And they may or may not have said that for real. But the point is, the federal ban has been lifted, so we can actually see some more evictions being processed, okay? Obviously, evictions will leave more of a supply in the market. That should kind of normalize prices and bring them down because there's much more supply kind of flooding in now that we're getting rid of people who are not paying. All right, now talking about the asset bubbles that are in intangible assets. So asset bubbles in stocks, asset bubbles in cryptocurrencies and things of that nature, okay? Like I mentioned before, the Federal Reserve is creating money and just throwing it into the economy. Banks create money because when they give you a loan, a lot of times, most times actually, they don't have that money in there, okay? They just put it in the screen. You need $30,000? Okay, boom, $30,000. Money's created. They did not have that money beforehand and you just put that money into the economy, okay? So when you have the Federal Reserve monetizing our debt and just pushing money into the economy, and then you have banks just creating money out of thin air and also pushing that into the economy, that is going to inflate prices. Money has to go somewhere. There is not a money waiting room. There is not a money heaven, okay? The money's going somewhere. And that is why you're seeing a raise in housing prices. why you're seeing high gas prices, why you're seeing high food prices. The money has to go somewhere. Our savings even got inflated because of all this extra money in the system, okay? So as long as these monetary policies are going on, not financial advice, this is my opinion. As long as we still have this easy lending process, as long as we have the banks able to just kind of print money out of thin air, they don't need any reserves. As long as the Federal Reserve is going to keep on just buying up treasuries and buying up everything in the world, we are going to see things keep on going up, okay? Nothing goes up in a sharp line, so do not go in the comments saying, oh, well, cryptocurrencies are down right now. Right, they're down right now. It will go up again, in my opinion, okay? People sometimes pull their money out of the market and they'll keep it in their savings and see what happens next, and then they might get back into the market, okay? That's why things don't go up in a straight line, because along the way, people are kind of like between that fear and greed scale, okay? So as long as we still have these policies, I personally think that assets are going to continue to rise. Something has to change. Either interest rates go higher, which means everything becomes less affordable. And once people cannot buy it, the price has to come down, right? If you have a shirt for $100 and no one is purchasing it, you bring it down to 90, 80, 70. Finally, at 60, people are starting to buy. Same thing happens with assets. If it's too expensive, they're going to wait till it gets back down to a reasonable amount, okay? On top of that, with stocks specifically, the actual largest movement of purchasers for stocks is companies buying back their own stock, okay? Which is BS to me. But as long as you have that in place too, I mean, up and up is going to keep on going. On top of that, people are having extreme FOMO. Like I mentioned, there is a fear and greed scale. Fear is so much heavier than greed is. So right now what we're seeing is kind of a mix of both of them, right? There's a little bit of FOMO and greed. So people are on both ends of the spectrum where they don't want to miss out on these cryptocurrency gains, right? They have that FOMO, fear of missing out, but they are also greedy because they see how volatile this is, and it's been making people overnight millionaires, literally, right? People are taking like 50,000 and turning it to $1 million. So the greed is there as well. Terrible cocktail to me, a cocktail for disaster. But as long as we have people who are having FOMO, they want to get in there. Robinhood was the most downloaded app at a certain point in the app store, okay? That's nuts. People are super into money right now, so they're pouring their money into assets because they're looking for the new lottery, right? The next big thing. They want to become thousandaires overnight. They want to make these big gains. So people are really rushing into the market because of that as well. So here's how everything can end and come to a crazy demise. I do want to say that there are people out here who are really wishing for a market crash. Like, yes, I want housing to crash. I want this to crash because I want to go in there and buy it at a discount. Those things come with repercussions. Be careful what you're asking for, right? Let's use the 2008 crisis, for example. A lot of people lost their jobs. A lot of people were in some deep doo-doo, okay? It was not a good time. Unless you were super rich and you had a stable job and income that was not really determined on, the recession. I don't know, maybe you were like already a millionaire. It didn't really impact you. Everything was on sale. But most people do not have that kind of same grace, right? So be careful what you ask for. If the Federal Reserve decides to stop their policies, I would imagine we would see an immediate drop in the stock market. Immediate. Because that is what's keeping everything propped up, okay? All this easy money flowing into the economy is what's keeping everything up. Like I said in the beginning, we're living in a warped society, okay? Nothing is what it seems because everything is manipulated. Even gold and silver, I'm a big proponent of precious metals and I'm a big proponent of real estate, but it's definitely overpriced. I personally do not want to succumb to the fear and buy a house right now because it's so high and I don't want it to get higher. I do believe eventually what goes up must come down. It's just figuring out when that's going to happen. With the housing market crash, that took 4 years to completely bottom. And remember, before 2008, there were no policies that we have right now. So now that we have these policies that basically prop things up, when will it go down? Probably when those props actually remove themselves, and who knows if that's even going to happen, okay? So it's really hard to tell. We can't really look back in the past, in my opinion, because we've never been in this situation where we have so much assistance in our free market, right? It's no longer a free market because it's so heavily manipulated. So can it go up for another 5 years? Sure. Do I want to wait 5 years before buying a house? No. So I'm definitely conflicted, but let me know what you think. Do you think that housing is going to go down? If you're in the market looking for a house right now, Are you doing that because you are in fear it's going to go up for even more years? People have been calling a housing market crash for the past like 3, 4, 5 years, honestly. And look at them, right? If you listen to that person, you would have been renting for another 5 years, wasting money. So personally, the way I think about buying a house, if you're buying it for your own personal gain, you're not really going to sell it. It's not an investment. Hard call. I personally would not buy a house that is not as an investment right now. As far as buying a house that is an investment, if you can buy a house that might need a little bit of work, but you can fix it up and it cash flows, honestly, it doesn't matter if your house is, you bought it at $400,000 and then it gets slashed in half the next year because you bought it for cash flow. And as long as rents are not being affected, as long as rents still stay at a place where you are able to maintain that mortgage and still put money in your pocket, then what happens in between is really irrelevant, honestly. If you believe in real estate, if you think, listen, it's going to go up eventually, I don't really care. And if you're interested in the most is cash flow, then as long as the asset is really paying for itself, then you could probably go ahead and make an investment right now. Not financial advice, right? This is just what I would do. As far as stocks go, there's plenty of room, in my opinion, for upward mobility because of all this easy lending. I have to kind of end this video, it's getting long, but a lot more potential for things to go up even higher because, like I said, the Federal Reserve doesn't seem to be changing their views on how much they're going to be assisting us. So until those things happen, we will not see a market crash. But let me know what you guys think. If I missed anything, please drop it in the comments because I definitely want to hear from you. But that will do it. If you like this video, then please be sure to like this video and share it with your friends. And if you have nothing else going on, you know what to do. Go ahead and binge watch me. And until next time, keep your money up.